Alright, good evening, ladies and gentlemen. Welcome back to Compound Interesting. This is Emil. Sorry for this amazingly professional setup. I've just moved house, so I haven't got it set up properly at all. So I'm just holding this microphone here. Hope you don't mind. I'll get a nice setup soon enough. But I just wanted to bring a video out as soon as I possibly could because I've been away doing exams. So that's where I've been doing accounting exams for anyone wondering. So I wanted to give my thoughts on the big crash that happened recently and what I'm going to be doing in regards to Bitcoin and other crypto for the next few months. And I also want to explain why there was that big crash after the dust has settled. Now we actually know why that actually happened. So with all that said, let's get cracking. So sorry if this mic is giving you a bit of feedback if I'm moving it around too much. Hopefully it's all right. But yeah, we'll get that sorted soon enough. Don't worry. All right. So what's going on in the crypto markets right now? Everything looked like we were going to the moon, and now we've seem to have hit a brick wall. So are we in a bull market or are we in a bear market? So in my opinion, all the technicals, well, not all of the technicals, but a lot of the technicals seem to indicate that we're in a bear market, while all the fundamentals seem to point towards being in a bull market. So let's run through some of the technicals, and then we'll run through the fundamentals and my exact approach of what I'm going to be doing over the next few months, because yeah, I think this is a critical time to be in crypto and to know what you're doing and to have a plan. So hopefully some of this information can help you come up with your own plan. So on a technical point, we broke the 21-week exponential moving average. So that was the historical support in 2017. Everyone always looked at that. We bounced off that so many times in 2017, and if we ever broke below, we only broke below for just like a small wick or a very short period of time before we'd smash back up straight away. So anytime it hit that, there was always bulls stepping in and buying up those dips. But recently, like a month ago or so, we actually broke that. We broke the 21-week EMA considerably, and that in 2017 that marked the end of the bull market. Once we broke that was the end. We went back up, but we couldn't break all-time highs again, and that kind of signified the end of the bear market. So that's one technical indicator that kind of points towards the end of the bull market. Another is the long-term regression chart, the long-term regression line. So if you linked all the peaks towards each other, if you link all the peaks up over the last 3 years, so the last 3 peaks, and then extend that out, we've actually hit that line, that regression line recently. So literally just at the very top, at 65k, once we hit that, we actually smash back down. So there's another kind of imaginary line that kind of indicates that we're in a bear market. But let's explain. I want to kind of explain a couple more reasons why I don't think we're in a bear market. And the other indicator was the pi cycle top indicator. So I don't know much about that personally, but seeing as I'm more of a fundamental analysis kind of guy, I do have a look at the technicals, but I put a bit more emphasis and weight into fundamental analysis. So on a fundamental basis, there is just still crazy money printing going on. This is like the best advertisement for Bitcoin and the best use case for Bitcoin. Biden has said he wants to print another $6 trillion. Now that you might not think, oh, well, yeah, sure, that's fine. He wants to print another $6 trillion a year for the next 10 years, at least until 2030 is when he said he'll start tapering off. And as if they're actually going to start tapering off. And to put 6 trillion into context, like we were printing, sorry, not we, but the US was printing less than $1 trillion, like a few hundred billion every year. But then the Rona came along and they printed 6 trillion, which was a crazy amount of money. In 2020, that was a crazy amount of money. But you think, okay, so they printed a load of money because of the Rona, so obviously they're going to start scaling it back. No, they're printing the exact same amount again in 2021 and 2022 and for the foreseeable future. So yeah, you saw how much Bitcoin rose on the backs of the last stimulus, the last $6 trillion stimulus. If that keeps happening every year, like anything that's scarce is going to go up in value. Like the US dollar is going to get absolutely destroyed. The other kind of technical thing that never happened before in a bull market is that we crashed 50%, over 50%, which is kind of indicative of a bear market. This did actually happen in 2013 in one of the first runs for Bitcoin. We went up and had a kind of a double peak, a double top. So that's what we're kind of hoping for in this cycle, that we had one big blow off top and then another one. Well, this time we actually didn't really have a blow off top. We had a rounded top, which is not very common in at the end of a bull market, or at the end of any kind of big run or any kind of bull market going into a bear market, it's always been preceded by a blow off top, so like a big but as you can see in this one, it was kind of a rounded head, which kind of says, yeah, we couldn't break this level, but it's not like we went crazy and then crashed back down. Kind of saying, okay, there were still buyers there, but the bears were too strong. It wasn't like, oh, there was only a few people buying up here and then everyone wanted to get out straight away. It was kind of hanging around those levels for a while, which is more indicative of a bull market. So in a bull market in 2017, if we dropped 50, we never dropped 50% in a bull market. It was always like between 30 and 40%, and then we'd go back up, 30 and 40%, and then we go back up. So everyone thought that that's what was going to happen in this bull market. However, the exact opposite happened. Everyone actually thought the volatility would reduce in this bull market because the institutional money was coming in. Even big Mikey Saylor thought that it was going to be way less volatile. All these big crashes, that was the end for Bitcoin. There was no more big crashes, and people were completely wrong about this. So one of the main reasons is in 2017 we didn't have nowhere near as much leverage in the system that we do now. So by leverage, it's people borrowing Bitcoin, basically borrowing money and borrowing Bitcoin to buy as much as possible, and that's why Bitcoin went up so fast, so quickly, on unprecedented speed, much faster than we did in 2017. And then it just kind of stalled out and crashed back down. We didn't have all that leverage, so on the way up it was kind of boosted up by leverage, the leverage that we didn't have in 2017. And on the way down, similarly, the leverage, the people shorting and all the people who got in too fast. And so obviously when something goes up really, really fast thanks to leverage, like the new buyers who are coming in are like, oh, this is going up so much, I better buy some. That's the kind of scenario where weak hands are built. So a lot of weak hands came into Bitcoin. They bought 50,000, 60,000, 40,000, and then they saw it crashing. We're like, no, I'm getting out. Sell. So unfortunately, Bitcoin is not going to get any less volatile. I actually said that I didn't think Bitcoin is going to get any less volatile. It didn't make any sense to me. Human nature isn't going to change. I didn't think it was going to get more volatile though. I had no idea that this 50% crash was going to happen, but I didn't think that Bitcoin was just going to steadily increase for forever and ever. Human nature doesn't change, and just because institutions are there doesn't mean that they're not weak hands either. So a lot of institutions, all the people selling recently were either leverage traders shorting the downfall, or they were new money, actually new whales. So institutions that have bought up some Bitcoin and didn't want to be the ones who had bought at the top, so they took the L or took their slight profits and got out as soon as they could. And we can see this on chain. It was all the big whales, well, the newly minted big whales. They're selling to the old hodlers like myself. So I'm still buying Bitcoin, but we'll get into that in a minute. So the last reason we went up so fast, this is the one that most people don't realize, is actually because of the Grayscale Bitcoin Trust. So if you know about Grayscale, they're basically kind of like an index fund, or it's a fund where people can buy a stock that's backed by Bitcoin, or should be backed by Bitcoin. So you can buy Grayscale shares on the stock market, and it's basically Bitcoin or Ethereum or whatever. And for a long time, the Grayscale shares were trading at a premium, meaning that the shares you bought, so say you bought $100 worth of share, that was only backed up by like $80 worth of Bitcoin. I think it was a little bit less than, let's say, $90 worth of Bitcoin. So there was an arbitrage opportunity. So I might butcher this a little bit, but it doesn't really matter exactly how it works, but it was something along the lines of these institutions were buying the Bitcoin on behalf of Grayscale, and then they were able to sell the shares at a premium, so they were getting that arbitrage opportunity. The only thing that matters is once that arbitrage opportunity finished, so once Bitcoin stopped trading, once the Grayscale shares stopped trading at a premium, then these institutions weren't buying the Bitcoin, and that Bitcoin that Grayscale would have bought wasn't getting locked. So once Grayscale buys Bitcoin, they don't sell it. They must keep all those Bitcoin. So once the premium went, there was no arbitrage opportunity. So the fresh buying supply from institutions dried up. So that was one of the reasons we kind of ran into a wall once the premium was gone. And I don't think anyone has really talked about that. So basically Lynn Alden I heard that from Lynn Alden. If you want to check her out, she was on the What Bitcoin Did podcast recently, if you want to learn that a bit better than how I explained it. But anyway, that's one of the other reasons that we kind of went up so fast and then kind of hit a brick wall. And the final reason, in my opinion, well, not even an opinion, most likely, is because of manipulation. So I'm sure you saw this post. If you didn't, you pause the video right now and you can read it. But basically, this insider was sharing information saying that these institutions were going to hammer Bitcoin, sell it, short it, and get it all the way down to 30k, because the train kind of left the station for a lot of these institutions. Bitcoin went way too high, so they didn't want to buy in at all-time highs. They want to buy in when it's being dragged back down, so their downside has been not eliminated, but their downside has been severely reduced. So it's much better to be buying at 30,000 or 40,000 than buying at 65,000, especially if you're an institution, because you have customers to look after, and they'll eat you up or sell your shares if you're making poor investment decisions. So you want to be buying at a much lower rate, and the way you do that is to spread a load of FUD. So obviously there was the China FUD, there's the energy FUD that's going around now. So yeah, China banned Bitcoin for the 14th time, and the energy debate, or the energy FUD, that's been going around for years as well. There's even the Tether FUD coming back up as well, I've seen. So yeah, this is all just noise. This has been well known and documented in Bitcoin for the last 10 years. Everyone knows about these things. Anyone who's been in Bitcoin for a while knows about all these things, but they're just recycled FUD, and they're getting a lot of traction right now in the media. And that, alongside with all these institutions shorting and selling, they're just trying to short and sell to trigger all the leverage traders to have to cut their losses, and to trigger all the stop losses from the leverage traders. I was even in a very small long position. I got liquidated. There was billions and billions and billions and billions of dollars that got liquidated, and that was just a way for these institutions to bring the train back to them so they could buy in cheaper, and they've successfully hit exactly where they wanted to buy it back in, at 30,000. So the smart money brought the train back to them so they could buy up more Bitcoin at cheaper prices. So you've got to ask yourself, do you want to be the smart money, or do you want to be the dumb money? They've brought back the train for them so they can buy in cheaper. Do you want to be the one selling them Bitcoin, or do you want to be the one buying the Bitcoin alongside them? So that's kind of one of the choices you have to kind of think about and research for yourself. So finally, let's talk about my plan for the next coming while. So if you've been watching my videos for a while, or a few months or a few years, you've seen for the last year or so, most of my videos, like I used to talk a lot about stocks, Tesla stock, all sorts of stocks, Square stock, etc. But for the last year, I've kind of been focusing on, first it was Bitcoin 1 year plus ago, and then I started going like balls to the walls into altcoins. So from about a year ago, for the last 6 to 8 months, all my videos, or a large majority of my videos, have been on altcoins, and you've seen how well altcoins have done in the last year, like up at least 10x in the last year, the entire altcoin market. So now I've got a few of my coins are all like 20x, 25x, and even Dogecoin went 50x. And now, maybe from the title in this video, you can see that my opinion has changed on altcoins. It is not the time, in my personal opinion. I'm stopping to buy altcoins now. They've had their run, and I'm actually looking to start taking profits once, which I believe will happen, once crypto starts taking back up in a significant way. But yeah, I was in crypto in 2017, and buying altcoins towards the end of the cycle that's what I did. So I'm just learning from my own mistakes. I lost a huge amount of money in altcoins. Well, just a huge amount. It wasn't a huge amount of money, actually. It was, but a huge percentage of my investment. Like, a lot of those altcoins went down 90 to 99% from their peaks, and I was buying up into the later stages altcoins. So maybe not from 90%, but yeah, I made some crazy losses on altcoins in 2017. So I think buying altcoins in the bear market is very smart, but buying our altcoins towards, like, the middle of the bull market, which I think we are in, I think that's quite risky. And I think most altcoins in 1 to 2 years time will be worth less than what you're buying them now. than what you're paying for them now, in my personal opinion. So if you watched my Bitcoin exit strategy recently, or my crypto exit strategy, I was kind of saying I'm going to start potentially selling a small portion of my Bitcoin and my crypto once Bitcoin breaks 60k, and I'm not actually going to sell my Bitcoin if it breaks 60k. I'm going to put in a stop loss if it went up to like 70k. I'm going to put in a stop loss at 60k, and etc all the way up. So like at 80k, I'll put in a stop loss at 70k. So then if it keeps going, I can keep bringing the stop loss up, so I'll get more gains. But obviously in that run, the stop losses weren't hit, or we didn't even reach high enough for me to put in any stop losses. However, I think it's a low probability that was the very top, for some of the reasons I explained. I think we do have another run left in us at least, and it just wouldn't make sense for Bitcoin to only hit 60,000, in my personal opinion, or 65,000. Even if you look at it on the charts, it just doesn't look like it's the end of the run. It didn't have to blow off top. It looks like it was too early. It should be, around December time in this year would have been the logical place for the top to be, because that was 4 years after the last one. And we go in these 4-year cycles because of the halving. And I've been saying for the last year or so that I think Bitcoin will probably outperform people's expectations this year, and most people's expectations were between 100 and 200,000, and I still believe that Bitcoin is more likely to over exceed people's expectations than underachieve people's expectations. I'm going to stand by that, and we'll see if I'm right or not. So in regards to buying, I'm no longer buying any altcoins, as I mentioned. I'm still buying small amounts of Bitcoin. Any kind of excess money that I have, I'll just be buying Bitcoin, because Bitcoin is extremely cheap right now, in my personal opinion. And I think there's a low probability that Bitcoin will be 40,000 again. And if it ever is 40,000 again, like say we go up to 100,000 and that's the peak, which is probably a pretty low peak in my personal estimate, which is, complete speculation. Like I don't have a crystal ball or anything, but let's say it went to 100,000, crashed 60%, 70% in the bear market, then yeah, you'll be break even on your 40,000 investment. So even if we only went to 100,000 in this cycle and crashed, 60, 70, 80%, like even then you're not like losing a huge amount by buying Bitcoin under 40,000. So that's why I'm still throwing some savings into Bitcoin. But once I had stopped buying Bitcoin over 40 or 50,000, when it went up to 65,000, I wasn't really buying any anymore. And yeah, over 50,000, I won't be buying any more Bitcoin probably. However, at these prices, like what else am I going to do with my money? There's not that many deals. Once Bitcoin starts breaking 50,000 again and shooting up, I'm going to be transitioning back into the stock market. So I've been in crypto, all my money been going into crypto for the last year, and now we're going to be moving back into the stock market, because that's where all the deals will be until the crypto bear market comes back in. In regards to selling, once Bitcoin starts breaking 65k all-time highs again, I'm going to be starting slowly laddering out my altcoins. I know they're going to go so crazy, but I'm not. Even if I don't get the exact top, I don't care at all. Like they're going to crash so hard. Well, if it was anything like 2017, they're going to crash so hard, and I don't want to be left holding the bags of altcoins, because it's so much worse than holding the bag of Bitcoin. And I don't care if I lose a little bit of. If I buy Bitcoin at 40,000 and in 2 years it's worth 30 or 20,000 briefly, or for a few months, I don't care. I'll just be buying loads of Bitcoin when it is that price. However, with altcoins, I don't want to be holding a large bag of altcoins again, because that was really depressing for the last 3 years until they finally picked up again. But some of them never even recovered from their all-time highs, like Litecoin and all the coins that were kind of garbage. They never recovered fully. So, and 90% of my Bitcoin I'm never ever going to sell, no matter what. Maybe if Bitcoin goes completely crazy at the end of the year to those wildcard scenario, I'll link one of my videos where I predict that Bitcoin will go to 700k in the wildcard scenario. It doesn't look so likely right now, but watch the video if you're interested. But yeah, if Bitcoin starts going crazy, then I'll probably have to sell a little bit of it. But apart from that, in my opinion, there's just no point. Like, Bitcoin's going to go to millions in the future, so I just want to have as much Bitcoin as I possibly can get my hands on, and Ethereum as well. I'll probably sell a very small amount of Ethereum, because they've passed the test. They're too big to fail now. They've they've reached escape velocity. And if you're watching this video, just look into it as much as you can, and if you come to the same conclusions I have, you'll want to buy as much Bitcoin and Ethereum that you can and hold it for a decade or two, and probably never have to work again if everything goes to plan. Alright, so it's good to be back. If you enjoyed that quick market update, well, not really that quick, but I'd hugely appreciate if you could smash the thumbs up button. Subscribe if you're new around here. I doubt you are, because I doubt I'm going to be popping up in your recommended feed, seeing as I haven't been posting videos in a while. But yeah, I'm back in business. I'll get a nice setup and get this microphone clip fixed so I'm not holding it like a moron. I really hope you enjoyed this little market update. Let me know what you think of the crypto markets in general right now. I really hope you enjoyed. I hope you learned something, and I can't wait to see you in the next one. Cheers.